The US has a monopoly over the world. They have the reserve currency which allows them to finance their schemes and has done so for decades. Countries hold on to US debt in order to have a secure investment, among other reasons. This could be advantageous to the US as long as these countries hold on to it forever. If they decide to sell, the lender of last resort must come in to fill in the gap. You came here for the truth, so let me unveil that for you. Do you care to guess who the lender of last resort is? Well, obviously, it's the Federal Reserve. If these countries like China and Japan and others decide that they don't want to hold on to as much US debt as they did before, suddenly they have to find somebody else to buy it. And then we look around and we see the lender of last resort. They are here to save the day. Congratulations, Bernanke, Yellen, Powell. You have done such a great job to ensure that the US currency will be destroyed eventually. Excellent. And they actually did admit this in 2002, Ben Bernanke's famous speech that they will devalue the currency as much as needed to avoid deflation. Get ready, folks. It's coming. Now, this information comes directly from the Treasury's own website. Major foreign holders of Treasury securities on the top of the list: China at over $1 trillion, Japan over $1 trillion as well. They are the major holders, no doubt. And we look at the fact that from July to August, they both sold some positions, all right? Now, they're still holding a massive quantity. Let's not kid ourselves. But they have been decreasing their positions for a while. I want you to look at this. First of all, this is a report from October 16th, 2008. I said I would bring the new numbers as soon as I have them. Here they are. And the actual numbers, though, are coming from August of 2018. Okay, there's a delay in when we can get the information. The actual factual direct from the source information, I only bring you that stuff, and that's what we're getting here as of August. Okay, so you could see all the countries there. Brazil, as an example, increased their positions by quite a bit, in fact. So you'll have to track this for yourself. I'm always getting the comments, oh, well, who bought? If this country sold, who bought? Go to this website, you go to a search engine and type in major foreign holders of Treasury securities, and you will see who bought and who sold. You have to be able to do the due diligence, all right? Looking at this, you can see that China has been selling in the short term, they've been selling throughout 2018, but I want to look at this all the way back from basically 2013, and you'll see for yourself that they have been selling their positions. They peaked out over $1.3 trillion in 2013, at the end of 2013, and ever since then, they have been selling. Now, there was a sort of short period of time where they really dropped down far, but then picked up the pace again. But if you look at it, this is actually continuing on the same line. So, as far as I'm concerned, they've been continuing a process of selling off their treasuries for years. For years and years, they've been doing this. Now, what they're going to do tomorrow, I have no idea. They may decide to buy tomorrow. Next year, they could have 1.3 trillion again. I really don't know. But what I do know is that if a country like China sells off a considerable amount of their debt, the US debt, then somebody has to come in to pick up the pieces. If Japan's doing it and China's doing it, well then, who in the world is going to buy $1 trillion plus $1 trillion, and maybe China and Japan won't sell it all, but maybe they're going to reduce their positions by half. That's possible over a several year period going forward. Look at China. Look at Japan. After we move from China there, seeing that we're at the levels not seen since 2011. So this is a significant decline. They were at about 1.25 trillion and ever since have been decreasing their positions slowly and steadily. This has been going on for years. So we can see that they have been doing the same thing China's been doing, and that is weaning off of the US debt. But along the way, they accumulated way too much, all right? But they don't want to spook the market. They don't want to make any drastic changes. So they're doing so at the slowest possible pace they can. This is understandable. I see what they're doing here, and it's just interesting to see how far they will go. I will continue to monitor the progress. Here you can see Saudi. How much of the treasuries do they own? Well, they're picking up the pace, and that has been going on for years. In fact, ever since basically the mid-2000s, they've decided that we're going to be buddy-buddy with the US, and we're going to ensure that we continue to buy more of their debt. That is a great partnership, no doubt. Even when one country is doing something that it shouldn't be doing, another country seems to sell them a lot of goods. As long as the relationship stays all good. Either side will look the other way when something bad happens. Here you can see Russia and China. That's the blue line and the red line. They've been decreasing their positions here. Russia, as you know, sold off a major portion of that. China has been doing so on a much slower scale. This other line here is Japan, but the only one in this chart that's actually increased is Saudi. Now, they've increased their positions. Brazil increased their positions, and it seems like a lot of other countries have decreased their positions. So we're looking at this. I'll just track it for you as time goes on. Now, this connects me in with my next point that I need to get into. And we're looking at BlackRock. Okay, you probably know them, one of the biggest companies around. All right, in fact, it's the world's largest money manager. Saw its net flows soften in the third quarter as nervous investors yanked money from its products. Now, hold on a second. Because I was told that the market, the FANG stocks, they've been doing so well. We've been seeing money flowing into these, except for this short period of time where stocks have been declining, that the FANG stocks were the way to go. Infinite amounts of money would be made because you know that the Federal Reserve is just going to bail them out, and we have nothing to worry about, and everything is just rainbows, unicorns, and fluffy clouds. I mean, I'm on a fluffy cloud right now. I mean, I just feel it. I have 7 shares of Amazon, and I'm content. You know, I just 7 shares times $1 million, $7 million. I'm rich. My goodness. All right, now looking at this here, long-term net inflows of $10.6 billion in the quarter were the lowest since 2016. But the most important part is right here. Institutions withdrew $25 billion from BlackRock's index and active products in the period. We have an issue. Institutional investors are bailing. The retail investors, the little fish, are trying to get with the big boys, the central bankers, which of course I'll be tracking the progress of that in the next little while to see what they've been up to. The outflows from institutions were offset by BlackRock's iShares ETF business, which saw net inflows during the period. And I'm going to show you some charts based on that. You'll see right here, here's the ETFs. Everybody's buying into the ETFs. Excellent. Institutional investors, though, they've decided to sell. The big boys know what's going on. They're selling. And then the ETFs, the passive investors, they're getting in there. That's not good. The institutional investors seem to be ahead of the game normally. Now, looking at BlackRock's institutional assets quarter over quarter, we'll see on average, if I take the average basically right here, that shows a decrease that's been going on quarter over quarter over quarter. I can see that right now. And that's not a good sign right here. Something needs to be looked at. Global finance chiefs used the closing session of talks in Bali to hammer home the message that simmering trade tensions are already denting global growth and need to be resolved. So they got together here, all of those individuals from the G20, they're getting together and they're saying, look, what do we got to do? What do you got to do? Nothing has been resolved. That's amazing. All right. You see a lot of people in China now preparing for the trade tension to be a prolonged situation. The downside risks from trade tensions are significant. So they went ahead with this and talked about the issues, but ultimately nothing is really resolved. It's just a meeting for the world powers to get together and waste everybody's time. Slipping a little, the IMF cut its 2018 GDP forecast for the world, euro area, and emerging markets. And it should, because you'll see that this has been the case for a long time. Look, the world, this is basically July's forecast versus October's forecast, and they bring this down for the euro, the world, and emerging markets. And it's funny, but they left the US at the same level. Interesting. China left at the same level. We'll see about that. It's going to be very, very telling to see what happens leading into 2019. That's what concerns me. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. So I do appreciate that very much. Just click that button and don't forget to subscribe. We're just about to approach 150,000 subscribers here in the coming weeks. So I would highly recommend that you click that button to subscribe. Videos come out every single day, and I hope that you will join the knowledgeable subscribers from all over the world. Truly appreciative of all of these people that are here. So if you're new to the channel, you can definitely join a growing group of really intelligent people. Last but not least, if you want the financial education that was not taught to you in schools, well then, these two books have it all. Check them out at the link in the description. And if you're more interested in the audiobook version, you can get that at themoneygps.com.